And welcome. This is Mary Ellen McGonagle, and you're watching the MEM Edge show brought to you each and every Friday afternoon at 5 p.m. Eastern Time. As usual, this is the show where we put you in front of where the action is in the broader markets. And it's certainly had a bit of a wobbly ending this week, so lots of good stuff to get to. We are, of course, as usual, going to review the current markets, take a really close look at where we are now and what we can look forward to. Again, as usual, this is all with an eye toward helping prepare you for the upcoming week and beyond. So from there, we're going to take a look. There were pockets of strength. The market was a little bit weakened, certainly over the last 2 days, but we are seeing clear-cut pockets of strength, and not all of it is defensive. So we are going to take a look at that and give a sense of what that may imply. And then also seeking safe haven yield stocks, always a place to look. I'm going to share with you some stocks that are looking particularly attractive. And not only do they offer higher yields, they also have growth prospects. So a very wonderful combination so that you can anticipate these stocks to go higher, not just because of their yield offering. And then also stocks that are due to report earnings. We are still in earnings season. And for those of you that may think that we're at the tail end, you are correct. However, this tail end period can be very, very vibrant. It's when we begin to get into some of the retail stocks. These stocks are going to be reporting not only their fourth quarter, their full 2019 earnings, and then also give a sense of their thoughts going forward. And there have periodically been some real winners that have come out of these later stage earnings reports. So lots to cover, as you can tell. Let's go ahead and get started with a look at that S&P 500, the bellwether among the broader markets. And as usual, we're looking at a daily price chart. What we want to key in on here is the position of the price relative to this shorter term 10-day simple moving average. I've found this to be very constructive over the years as far as being a guide to where the markets are, where they may be headed. And currently, we are seeing a bit of a break below that 10-day simple moving average. Certainly not a red flag by any means. We've had periodic pullbacks going back historically. It's just a bit of a yellow flag. From there, what you can do is go ahead and take a look at some of the other technical indicators that I like to use. They are momentum driven. Up on the top here, we have the RSI. That is a relative strength indicator. And ideally, we want that RSI to be up above this net neutral 50, which we are. But ideally, we do want it heading north. But it's beginning to dip down just a bit, but we are still good as far as being in good standing with that RSI. The moving average convergence divergence. This is another momentum indicator. And we can see that it also is up above this net neutral 0, so it's in positive territory. Just a little pointing out here, this with the MACD, you want to pay attention to potential signals in the sense of this black line crossing either upward, in this case early in February, that was a signal that this pullback had ended, and then back here when this earlier uptrend had a dip, we did get that negative black line through the red. And so we are just in the throes of that kind of potential action with this MACD black line potentially crossing down through the red. We're not quite there yet, but it is something worth noting. And I don't want to leave looking at the broader markets without taking a quick peek at a weekly chart, because this is going to be even more telling in the sense that it's going to give you a bit of a bigger picture. So we're looking at a weekly price chart. I'm going to go ahead and shift that MACD to stochastics, another very helpful, powerful momentum indicator. And so if we just take a quick look at this weekly chart of the S&P 500, you'll see that there really is nothing on the horizon that would be alarming, in the sense that these broader market indices are the S&P finding support at this upward trending. This red line is now a 10-week or a 50-day. The RSI is just dipping out of that overbought position, and the stochastics are in good standing as well. Now, the weekly is going to be more powerful and useful for some of these really bigger corrections, and in this case, taking us back to the end of 2018 bear market. So the weekly, again, is zooming you out. It's giving you a bigger picture. If you do begin to see a breakdown on the weekly, it certainly is going to be quite a bit more concerning. But for now, we do appear to be in good standing there as well. Moving right along from here, it is really a good idea each and every week to go ahead and take a look at the underlying sectors within that S&P 500. We want to see where the relative outperformance is, where are the money flows, where's the strength. And so what I've gone ahead here and done is, and this is something you can do very easily in StockCharts, go ahead to that weekly sector summary here, and at the bottom, one of the choices is to get what's called a sector candle glance. That's going to provide you with a 2-month daily price chart. I've gone ahead and overlaid an RSI on top of these charts, sorted it in descending. I want to see where that strength is, and take a look up here in the forefront. Boy, if this does not say defensive, utilities, real estate, and staples up here in the forefront. Now, again, at first glance, you might very easily argue that that is a defensive stance, but as someone who follows the market very closely and is on the prowl for growth stocks, I will tell you there are clear-cut pockets of growth within utility and real estate that are also, again, providing you that yield in addition to growth prospects. A lot of these that's going to be the REIT stocks in this real estate sector. Let's go ahead and pull this chart up. I'll give you a bit of a better view here. Take a look at this big uptrending rally here in the beginning of February. This is the period, again, latter stages of the earnings season. These REIT stocks begin providing their numbers for Q4 2019, guidance going forward, and it's been really very, very robust. Real estate stocks, not this week, but the prior week, were up 5%, and they have a real trifecta, kind of a perfect storm going on with low interest rates, and then each individual sector has dynamics that are propelling them higher as they can acquire these properties with these low interest rates, add to their portfolios, and thereby add to their growth. So I do cover this quite a bit in my MEM Edge weekly report. Those of you that subscribe are very familiar, and we've been able to identify a number of leadership stocks within real estate. Same for utilities. A lot of these guys are reporting very robust numbers, and it has everything to do with where they're located. Are they in providing utilities in growth areas of the US? And are they also adopting new technologies? So that's another area that I cover with my MEM Edge report. I urge you to take a trial. You can do that at a very nominal fee, but let's go ahead and move down further, because we want to pay attention to where that weakness is, making sure that you're not heavily weighted in those areas. Of course, energy is just having a difficult time getting off the mat, so to speak. Financials are suffering that low interest rate environment that is helping some of these other areas of the market is not a boon or a boost to financials. So a number of bank stocks are suffering. Industrials, we are going to take a closer look at industrials. There is an area within industrials that is picking up that I think you'll find quite interesting, because one of the focuses today in our show, I want to focus on companies that are US centric as far as their revenue sources. And the reason, of course, is because this coronavirus fears, it's all about global growth fears. And we are seeing a very definite pickup in companies that are, again, primarily derive their sales from the US. They may only be partially impacted, not entirely, similar to some of these bigger global stocks or companies. So that is the sector review. Let's go ahead and take a look at some of the other industry groupings from my work that I find to be really powerful as far as getting your finger on the pulse of where the market is currently seeing strength and where it may be headed. This is another candle glance view. So we have each of the broader market indices, the NASDAQ, the Dow, the S&P, and small cap stocks. Also sprinkled in there are defensive gold stocks, transportation. IGV is one of the bigger software, cloud computing software ETFs. That's a group that's been super vibrant, and biotechs. So again, from here, overlaid the RSI, sorting it by descending, and take a look. Gold stocks very much in the forefront. Again, this I would argue is a safe haven play, but we're also seeing global central banks that are buying gold to shore and help out with their monetary policy provisions. And secondly, here, take a look. We can see volatility picking up. This is the VIX, the volatility better known as the fear index. I'm going to go ahead and blow this up so we can get a better sense really how bad was today's sell-off in inducing the VIX to go higher. We closed at 17, and from my work, I find anything above 18 to be concerning. So we're not quite there yet, but we are getting some dynamics that indicate that we could see fear continue to increase. We'll certainly keep an eye on that. But of notice, and what I want to share with you is the fact that biotech stocks, the biotech index was up 0.5% last week, and that's as compared to some of the broader market indices, such as the S&P down 1.2%, the NASDAQ down 1.5%. Hopefully we'll have time. I want to get into these biotechs and where specifically we're seeing the strength, primarily because biotechs are viewed as a very risky investment. If we see money flows into that area, that supports the concept of confidence. So biotech's very interesting up here in the forefront. We did see a sell-off in these software stocks as well as other areas, but I also wanted to share with you these small cap stocks. We're using the Russell 2000 index. The Russell 2000 also outperformed. It was down only 0.5% this week. So I just have so much I want to share with you, but what I want to say as it relates to these small cap stocks, two dynamics at play here as to why this index is holding up well. One is earnings related. A lot of the big movers here in the small cap space are just popping. They're having huge moves, all related to earnings. And that is what I like to see, because if the US markets can focus on good, strong earnings, that is a positive that they are potentially able to ignore, if you will, the virus impact. But one other thing to note within small cap stocks is the fact that a lot of these companies, because of their size, they are US centric. They're not as global. Not all of them, but by and large. So that is another area certainly of interest that we can go ahead and get into. What I'm going to do right now is go ahead and take a very brief break. When we get back, lots more information that I can share with you. We'll be right back. And welcome back. This is that weekly view that I mentioned earlier as far as this sector summary. And what this does quite simply at the end of the week gives you the opportunity to very quickly assess those areas that outpaced or did better than the broader market. So that would take us down, given that the S&P was down about 1.27. Each of these industry groups above did in essence outperform, and certainly led by these real estate stocks. I'm going to just share with you a very quick way that you can potentially assess. In fact, glad we did this, because real estate holding and development. Now take a look, because we do give the StockCharts technical rating of the underlying sub-industry groups within each and every sector. And what I want to share with you here is the fact that a lot of these REITs are up here in the forefront as having been outperformers of late. But real estate holding and development at 39 is, we can just go ahead and pull up the chart very quickly, and you'll see that it has been underperforming, certainly taking us back to the end of last year. But take a look at this pickup this week. Now, this is something that is of interest to me, because I was able to go ahead and drill down and uncover some individual stocks that are benefiting and picking up that we can take a look at. And a number of these names are small cap. So what we can do here is take a look at some of these stocks and give you a sense of areas that you could potentially participate in this move back into. This first one is Green Brick, GRBK, and a lot of these are companies that are benefiting from the move back into housing. A lot of housing stocks are doing well. They have been, they're continuing to do well. So we can see this nice uptick here on earnings. The stock broke out of this base, big volume. RSI and MACD are quite constructive. I'm going to share with you a couple of other names in this area that are holding up really quite well in this real estate development, this area that supports these realtors. So we can take a look at it for, as an example, at a company, Realogy, RLGY, another small cap. We can see the stock broke out here in the beginning of February, out of this nice sound base into this uptrend. It is a bit overbought, but more to the point is the fact that you have what is called this add-on effect. These areas of the market, these groupings that are going to do well in the face of a broader group doing well. So see if I can pull up one last one that is in this space. The company is called Redfin. Again, another smaller company, but take a look at this gap up here late last week and a continuation. You would have no idea that the broader markets were suffering. So this is a small cap company that is similar to Zillow. They provide information regarding your home's value. But more important here with this gap up is the fact that the company also opened a real estate brokerage division, and they're expanding throughout the US. So a very clear-cut uptrend there. So let's go ahead and move back. I do want to go back to that sector summary page, because we talked about taking a look at higher yielding stocks. Let's just go ahead into this real estate investment area. Retail REITs have been suffering, so I do want to take us to an area that has been a bit more vibrant. This is specialty REITs. So two different ways that you can potentially get in front of stocks among and within the REIT sector that are potentially poised to continue to outperform. Now, of course, this first sort is going to be by those that really powered higher this week. And it might be of more interest if you go ahead and sort it by this StockCharts technical rating, because realistically, the regrouping was up very, very slightly this week. So we want to take a look at some of these underlying areas that are looking really quite constructive, not necessarily the ones that have just had outsized returns this week. So very quickly, I can see a number of really compelling stocks. I wrote about SBAC in an article on StockCharts last week you can take a look at. We talked about MPW during last week's show. This is one of the REITs that is on the MEM Edge list. There are dynamics that are taking place among healthcare and medical properties that are really driving these stocks higher. So again, sorting it by this scooter rating and then taking hold of that move into a particular area. This is another healthcare related REIT that's in a clear-cut uptrend that looks poised to continue to benefit from that move. So moving back to this sector summary for the week, what I wanted to do is share with you consumer staples and what may or may not be going on there, because a lot of people, and it's rightfully so, there's a tendency to think that consumer staples is a go-to area as far as being defensive. However, not so. We're seeing real deterioration here among particularly some of these food products stocks are really falling apart. Pardon me, we can take a look at a couple of examples here. This is the group chart and any number of stocks that, in fact, this stock was down today on earnings, really getting walloped. And then any of these food stocks such as TSN, these guys were big winners last year with the whole protein-based meat products, but a lot of them are really just falling out of bed. So that's not where we want to look. Let's key in on where we do want to look, and that is going to be, as it pertains to the sector within consumer staples, is surprisingly going to be beverages. And I'll tell you why. What is happening in the beverage community, for those of you that may not be entirely tuned in, but soft drinks, that area of the markets has really grown significantly. Long gone are the days of Pepsi, Coke, and that's it. And in fact, within these beverage companies, they are in fact expanding their product lines. They're going into new areas with these now that is not a great looking chart. That was KOF. I think what we want to do is get to, that's the distributor, we want to get to KO, and that's going to look quite a bit more constructive. This gap up here, all about earnings. They expanded their line into a Fuse, which is a caffeinated tea products, caffeinated coffee related. So huge. If you go to the beverage aisle now of any market, it's just, you're inundated with choices, but obviously there is demand. So we can see a pickup there. Pepsi is another one, not as dynamic, but they have also expanded their beverage line. So I did want to point that out to you because both of those stocks yield over 2%. For those that are in the market for kind of a lower price potential turnaround, this is a company called New Beverage, NBEV. They do not offer a yield. What they do offer is CBD infused beverages, and they just this week signed a contract with Japan. So what we can see here dynamically, because I want to point out to you, when you are on the prowl for these downtrend reversals, a couple of dynamics at play here. One is the price breaks back above, in this case, the green 10 and the red 50-day simple moving average. And then when you can marry that with a positive, now up above 50 RSI, a MACD up above 0, you are in good standing. This 10-day line up through the red, that is your golden cross. So we have a lot of good positives going on here. I'll tell you though, it is only a 2.7, not even a $3 stock, and I would need it to break above that 200-day simple moving average before turning even more bullish, but more a case in how to spot these downtrend reversals. You can apply those characteristics, of course, to larger stocks. So overall, those consumer staple stocks, not such a place to hunt, if you will. What I want to do is see how we are on time, because I talked to you about earnings season, and I want to share with you some of the companies that reported this week. And this is in that small cap space, TXRH. This is a smaller restaurant stock. Take a look at this big gap up here, huge volume. And this is what I was mentioning to you earlier as far as smaller cap stocks that are coming in with positive numbers. There are any number of companies and stocks out there that really are defying what we are seeing in the broader markets. This is Dropbox, gapped up 20% today on positive earnings. I'll just share with you one last name. And as we are reviewing this is eHealth, EHTH, and the stock is gapping up on strong earnings, huge volume. And importantly, what I did want to point out to you is the fact that the vibrancy among these small caps it may be very critical, that bubbling up factor, because really when we look at the S&P 500, a lot of what has been driving that move has been these larger cap stocks. We can look at Apple, huge big outperformer until this week, and certainly Amazon picked up here more recently. It's dropping, but these big bellwether stocks have been clear-cut outperformers, and they really their potential deterioration may show in the broader indices, but it's not telling the entire story. Now, one last thing that I did want to share with you was the concept of those areas that got hit the hardest this week. And I will tell you, technology was down 2.5%. Now, that may seem like a significant drop, but as you can see, take a look at this daily price chart. Technology stocks have been very clearly leading the markets higher. So what I wanted to point out to you is, going back on a weekly price chart, the broader markets did turn in the beginning of October. Here we can see it as technology stocks really came to life. This is that October breakout of that base. And again, MEM Edge report subscribers, we were all over it as far as getting into the group and into subgroupings within tech. But more to the point today is the fact that technology, since that October reversal, was up over 21%. So when we see this move as far as being down 2%, it's not going to be as alarming, because that 21.5% advance is really well above many other areas of the market. We can the S&P during that same period was up 11.5% since that October 1st move. So we can see that tech was up almost double that. Let's take a look at some of the other sub-industry groupings within technology. This is semiconductors, taking us back to that October move. Semiconductor stocks were up 20%. Actually up more than 20%. So what we can do is pull up this daily. We can see that it's pulling back here, but my point here is it's all rather relative, in the sense that those stocks that are getting hit the hardest at this point in time are those that have been clear-cut outperformers. Now, of course, this is where having a system in place is going to be really critical, so that you can know whether this is a pullback or is it something more. You can go to my MEM Edge, the MEM Investment Research website, and I do have courses that will tell you how you can tell whether it is just a pullback or something more. And then I have one last area that I did want to point out to you before we need to go ahead and end it for this week, and that is the continued move into solar-related stocks. Now, that's not your best. VSLR is another one, but I did want to point you toward this. Conventional electricity and solar has been super hot. For those of you that like what you've heard today, go ahead and click on the link below, and you can trial my MEM Edge bi-weekly report, again, for a very nominal fee. Until next week, happy trading.